Bankruptcy can feel discouraging and overwhelming, but it doesn't mean homeownership is out of reach. The timeline for getting a mortgage depends on the type of bankruptcy and loan program you pursue. Let's break it down. There are two common types of personal bankruptcy, Chapter 7 and Chapter 13. Chapter 7 involves liquidating assets to discharge debts, typically for those without steady income. Chapter 13 allows individuals with regular income to reorganize debts through a repayment plan over 3 to 5 years. For Chapter 13, borrowers can apply for an FHA loan 1 year after filing if they've made on-time payments and have trustee approval. After discharge, the waiting period is just 1 year. Chapter 7 requires a 2-year waiting period after discharge for FHA loans, while conventional loans often require 4 years. Non-QM loans are an alternative with no waiting period. These loans are designed for unique circumstances, such as recent bankruptcies, but they usually come with higher rates and larger equity or down payment requirements. VA loans are another option for eligible veterans, requiring 1 year after Chapter 13 or 2 years after Chapter 7. They offer benefits like no down payment, making them attractive for those rebuilding after bankruptcy. To prepare for a mortgage, rebuilding credit is essential. Start by making all payments on time, using secured credit cards, keeping accounts active, and monitoring your credit report for accuracy. A larger down payment can also improve your application, though it doesn't override mandatory waiting periods. Bankruptcy isn't the end of your financial journey. With the right approach, you can rebuild, qualify for a mortgage, and achieve your homeownership goals. Visit jvmlending.com for more info or to talk to a mortgage expert directly.